Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update. Today we got building permits preliminary for December. We got a little bit lower, and Philadelphia manufacturing came in the negative, also a little bit shorter than expected, but still in the negative. But the big one was initial jobless claims. Initial jobless claims, we were expecting 214, up from 205 on the previous one, but we would look at this way lower initial claims, and continuing jobless claims came also a little bit higher, but not as high as we were expecting. So these combined with the housing starts that more or less at higher than expected, looks like the markets didn't like it, and we are continuing lower. So first of all, we got the initial jobless claims up here. This was 8:30. We sold off, we hold the pre-market pivot, and we started going up. I took this nice scalp for this bull flag, this breakout, and into the open I sold most of my position due to this kind of move that I don't like, that is double top, double rejection, and I went short up down here for a nice move through low of day and into that level pre-market. So that was a nice move, but after that we started shopping around. Look at these weeks, and basically we are going in this big trend. We are doing low after low after low, and we are not improving. We are just consolidating down here with two big volumes in the volume profile. So looks like shorts are still adding and taking profit and actively trading during the day. So be careful if you are long bias, because today is not a good day. Minus 1.21 for the Nasdaq, and Tesla and Amazon more than 2% in the red today. So why is this happening apart from the economic data that was short? We got shorter decrease than expected. Well, we have to take a look, as I was mentioning in the market forecast this morning, we have to check the options expirations for tomorrow. Tomorrow is third week's option expirations with total open interest amount of more than 5.3 million. Max pain is 390, and actually this level, look at this wall of puts that we have below 390. So I don't think markets are going lower near this wall of puts, because remember that Wall Street writes off all these options and they don't want to pay anyone. So it is on their best interest to keep the markets above 390. But why are we not going higher? Because we have these 400, these 120,000 calls and more. I mean, these people in 430s are a little bit crazy, but we are staying in between these two levels, 390 and 400. And actually, they are trying to cut shorts below 390 and try to induce bulls and more calls into 400. This is going to happen today and also tomorrow. I think tomorrow is going to be super volatile and extreme manipulation is going to happen because it's the last day. So don't be surprised if we start to recovering 390s and start pushing 400s. In terms of futures, that would mean that we finish the day. I mean, we are compressing here, so I wouldn't be surprised if we start to show, to break this triangle, and we go higher until reclaiming perhaps this level that we have here. So if I think we can see like this, and also taking into account this resistance, I wouldn't be surprised if we finish around 11,400. And that would mean that if we are right now down here, that would mean half a percentage. So we would end the day basically 0.6 in the red, nothing big. And that would mean that in the daily, we are also ranging in between this pivot, these two pivots that we left behind in this push into the trend line, and we will hold this 11,400. So that would be great for basically repair this compression into the breakout next week. That's what I think is going to happen. They don't want us to push. They won't let the markets go up this week due to a lot of puts above 400. But next week, I think there's a lot of people with a lot of puts on 11,000. So that would make sense to push higher and finally break this trend line. This is my speculation, my opinion. So remember, make your own decisions, but based on the things that I usually follow and some indicators and options and also the economic data that we are getting, I wouldn't be surprised if we are not pushing this week and we start going again towards 11,700 for next week. Everything can happen, and if economic data continues coming the way it is, that is bad is good. So I wouldn't be surprised if we test again these pivots. I don't think we are going for these lows yet. So perhaps they will try to trap and then do another false breakout to test the lows. I don't think we are going directly to test these lows. A lot of people saying that this year we are going to break these lows again. I don't see the markets that bad. I don't see the economy that bad. So we will see. Dollar. So dollar is basically trying to hold this trend line, this huge trend line that we are getting since 2021, and it's trying quite hard. I think this level is quite good if you want to enter Forex, but I would wait until yields stop going up. It's usually here at the right-hand side. All yields and all futures are up. After yesterday's big drop, now it makes sense for them to go up because the markets are going down. Remember, yesterday we had convergence between markets and yields. That's usually not what you want to see. If markets are going down in this situation in which we are right now with interest rates and the economy, you would expect that interest rates, yields are going up. So yesterday, both were going down and it made no sense. That's why I'm claiming that there's a lot of manipulation due to options expiration. But today we are bouncing off this 4% on the 2-year, and the 10-year, it's also trying to bounce from this 200 EMA, stair stepping down, but I think we will try to recover soon. But it's more the most interesting thing from bonds market is this. As always, let's check. This is April's 2023, April's this year, still pricing in 4.8% of interest rates, and the same for September. And it's then in December when markets are pricing in a 50 basis points cut, even though the Feds are continuously still saying that they are not going to cut this year any rate, and they are going to push at 5%, not 4.8. So there's still a gap in between what markets are saying and what Feds are trying to do. That would be interesting because one of those are wrong. So we will have to wait and be patient for that to develop. But a lot of analysts say don't fight the Fed and maybe markets are too positive. We will see. Crude oil, green, still holding Remember that energy going up and holding levels, looking for higher pricing, it's bad for inflation. Last CPI was offset, the increase in shelter and services was offset due to this decrease in prices in crude oil and energy overall. So if energy is going up, be careful because next inflation number might be also higher. So be careful with that. And finally, let's go back to the Nasdaq and take a look at this. This is what I was calling. I wouldn't be surprised if they push again, as I was saying, these levels of 11,000, but this is a nice push into the power hour. I mean, after lunch. So this is the kind of market we are playing. You have to understand the game and you have to follow the rules. So that's all for me. As always, thank you for your time. If you have any questions, remember you can comment down below. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. I put a lot of effort on these videos, daily videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. So your support is always appreciated. I appreciate your time, and remember the trading day is not over yet. Look at these kind of moves that are still playing out. So be careful with your position. Be aware that manipulation still exists this week more than ever, and discipline and risk management are key for your success. Stay safe, everyone.